Good day, everyone. Welcome to Zenshin Steps, where we aim to share ideas that can help you move forward toward your destination step by step. Through your own journey, you may have already heard about an investment called an index fund. Today, we'll be sharing with you how money can grow through index funds. If you're new to this, that's okay as well, as we'll also be sharing an overview of what an index fund investment is. Our goal is to provide ideas that can help you experience the magic and the joy of growth toward financial well-being. We're cheering you on as you keep moving forward along your journey. And it would really be a big help if you could like and subscribe to our channel. Let's start with a story. On one life-changing birthday, I received a book as a gift from my family that broadened my perspectives on money. A book entitled Money, Master the Game by Tony Robbins. It was a blessing as I was coming from a string of failed investments and wanted to get more ideas on how to better grow the money I had saved. And for this, a guide was essential to help improve my approach. Fortunately, this book provided me with the guidance I was looking for. Here, Tony Robbins shares lessons from the world's top investors like Warren Buffett, whom he interviewed to learn about their strategies. This also led me to read Tony's next book, Unshakable, which simplifies those ideas even more. By taking action on what I had learned from these books, I was able to experience the magic and the joy of one of my investments growing for the very first time. As Tony would share in Unshakable, action and execution trump knowledge every day of the week. This was when I realized that investing is its own unique pillar in our approach to build and improve one's financial well-being. As a start, we need to earn income, whether through work or a business, then save up and also defend against emergencies. We also need to protect ourselves with insurance, enjoy life through recreation, and also give back and share. But one crucial pillar is investing to grow. The aim of investing is to grow the money we saved from our earnings. This is the growth pillar of our financial well-being. And this is where index funds come in, which provides an opportunity to grow wealth over the long term. As I was reading through Tony's books on Money, Master the Game and Unshakable, what stood out and inspired me was a quote from Warren Buffett, one of the greatest investors. He said, "Put 10% in short-term government bonds and 90% in a very low-cost S&P 500 index fund." That got me interested in investing in index funds, as it was guidance shared by one of the world's best. Moving past uncertainty, I took action to invest. Looking back, it was a great decision, as investing in index funds from resilient markets has shown strong long-term growth for my own investments. Of course, this does not happen overnight. Growth comes in the long term by consistent investing and patiently staying invested until your investment seedlings grow into flourishing trees. So what exactly are index funds? They're simply investment funds that track a market index like the S&P 500. When you buy an index fund, you're not investing in just one company. You're investing in the whole basket of companies inside that index. That means when you invest in an S&P 500 index fund, you're essentially investing in all 500 companies in that index. It's a way to get broad market exposure without the need for actively managing your investment. This simplicity is one of its greatest strengths. Imagine if you want to enjoy a variety of fruits without having to buy each one individually. Instead, you purchase a fruits basket that contains a little bit of everything: apples, bananas, grapes, and more. This basket gives you a taste of the entire fruit market without the hassle of selecting each fruit separately. Similarly, an index fund offers you a basket of stocks that represent a whole market index, like the S&P 500. Instead of picking individual stocks, you invest in the entire market, gaining exposure to a diverse range of companies. This diversification helps spread risk and simplifies the investment process, much like enjoying a variety of fruits from a single basket. The opportunity in index funds really resonated with me. After my past experiences with failed investments, I wanted something that could lessen the risk. Index funds gave me the benefit of reduced risk through diversification, because the performance is spread across hundreds of companies instead of just a single stock. Also, the savings accounts I had invested in had low returns. By investing in an index fund, I would be able to take advantage of the growth opportunity for more resilient markets like the US, which have shown resilience and growth over the longer term. Moreover, since I was very busy working full-time at my corporate job when I started this journey and couldn't monitor stocks every day, the passive nature of index funds fit my schedule perfectly. Buy and hold the investment, which means to keep the money in the investment over the long term at more than 10 years, and let time do the work for growth. Now the next question would be, how does an index fund work? How does money actually grow through an index fund? Unlike a savings account that gives you a fixed interest earned on the money consistently over a specific time period, an index fund follows the ups and downs of the stock market index it tracks. For example, if the index doubles in value, then the investment doubles too. If it declines, then the money will also be decreased. To illustrate this further, let's take a simple example where someone invests $100 in an index fund. When this person invests the money, the stock market index, which the fund follows or tracks, has a value of $2,000 in year 1. Then let's say after 8 years, the stock market index, which the fund follows, increases to $4,000, or it increases by 2 times or double the original value of $2,000. Since the index fund follows the movement of the market, the $100 invested will similarly follow the pattern of the increase of the market. Since the market index doubled in year 8, then the $100 invested will also double in year 8 from $100 to $200. If we now move forward to year 15, where the stock market index the fund follows increases to 6,000, which is triple or 3 times the value as compared to year 1 at 2,000, then the money invested will also follow the same pattern. The $100 will now become $300, following the pattern of increase of the market index from year 1 to year 15. This is how money will grow in an index fund, by following the movement of the market the fund tracks. Thus, it is important to choose an index fund that follows the stock market index of a resilient market that grows over the longer term. Given this behavior, an additional tip would be, when someone buys or invests in an index fund, they will have to hold it for the longer term. Hold here meaning to keep staying invested in the fund over the longer term at more than 10 years to reap the benefits of long-term growth. It is not an investment where you pull out the money midstream, since it is very difficult to time the market. As we have seen in the performance of a stock market index like the S&P 500 from a resilient market like the US, it goes up and down in the short term. But if we look at the long term, as seen in the chart below, it has a longer term upward trend. The danger is, if you pull out the money on a downturn, it will lead to negative returns. The key is staying invested long enough to ride the long-term growth trajectory. This long-term growth trend is where the gains will come in, and one can only reap the benefits by staying invested long-term. For this, time is your friend and your ally for growth. So that's it for today. We hope you were able to gain a better understanding and greater clarity on how money can grow through an index fund. By following the pattern of the stock market index it tracks, over the longer term, an index fund of a resilient market can show potential for growth. Thank you so much for your time and generosity. Through these ideas, we hope we were able to serve you along your journey toward experiencing the magic and the joy of growth.